Hello everyone, I am Dr. Kalpana. Today we are going to discuss about non-banking financial companies. In short, we call them NBFCs. So in this lecture, I would be discussing with you an overview of NBFCs and their regulation mechanism types and key differences between banks and NBFCs, role and functions. So first, what NBFC is a company which is registered under Companies Act 1956. Now it is 2013. We have changed that enactment. Engaged in any business of loans, advances, acquisition of shares, stocks, bonds, debentures, securities issued by government or local authority or other marketable securities of like a nature, leasing, hire, purchase, insurance, business, chit business. All financial products are there, if you can see, but does not include. So we need to exclude in our understanding what NBFC doesn't do. Any institution whose principal business is that of agriculture, because agriculture RRBs and cooperative banks are regulated by NABARD, and their purpose is different, and they are banks within the definition of banking company. Industrial activity, purchase or sale of any goods other than securities, providing any services and sale, purchase, construction of immovable property. So a non-banking institution, which is a company and has a principal business of receiving deposits under any scheme or arrangement in one lump sum or in installment by way of contributions or in any other manner, is also a non-banking financial company. And rest of the companies are called non-banking companies, not NBFCs. So be clear about your understanding. There are three kinds of company we are discussing here: banking company, non-banking financial company whose principal business of in finance, and residuary means rest of the companies are non-banking companies. So now, what does conducting financial activity as principal business mean, which is very important aspect to understand to identify an NBFC. So financial activity as principal business is when a company's financial asset constitute more than 50% of the total assets and income from financial assets constitute more than 50% of the gross income. A company which fulfills both these criteria will be registered as NBFC by Reserve Bank of India. So term principal business has not been defined by Reserve Bank of India Act 1934. Reserve Bank has defined it so to ensure that only companies predominantly engaged in financial activity get registered with it and are regulated and supervised by it. So hence, there are companies engaged in agricultural operations, industrial activities, purchase and sale of goods, providing services, and purchase, sale, or construction of immovable property as their principal business, and are doing some financial businesses also in a small way. They will not be regulated by RBI. So this is very clear by Reserve Bank of India. Their principal business is a prerequisite to get registration with RBI. Interestingly, there is a popularly known as 50-50 test, as I have discussed in first paragraph, is applied to determine whether or not a company is into financial business. So this is a 50-50 test, means financial activity as principal business when companies' financial assets constitute more than 50% of the total asset and income from the financial assets constitute more than 50% of their gross income. So that is the technical test to identify whether this is NBFC or residuary other non-banking company. There are some key differences why we call them NBFC, not a banking company. So in order to identify whether that company is a banking company or a non-banking financial company, so NBFCs are doing functions similar to that of bank, but they are not bank. So question is why? So we need to understand these key differences. So NBFC lend, make investment, and hence their activities are similar to that of banks. However, there are few differences as given. Number one, NBFC cannot accept demand deposit. Demand deposits means those deposits which are repayable on demand. That's why we call them demand deposit. So a demand deposit is a money deposited into a bank account with funds that can be withdrawn on demand at any time. That's why we call them demand deposit. Second difference is NBFC do not form the part of payment and settlement system. Whenever there is any transaction in a bank, you must be knowing there is a system of settling that transaction and settling all the charges or any TDS, etc. You must be knowing this kind of functioning whenever you do any transaction. So cannot issue checks. That is significant difference. Any NBFC doesn't have that right to issue check, the checkbook. No participation in clearing houses. The payment and settlement system in India is managed by Reserve Bank of India through the National Payment Corporation of India, that is called NPCI. So bank participate in clearing houses and real-time payment systems like RTGS. I think all of you must be knowing all these transaction mechanism which we are using since long whenever we do internet banking, NEFT and UPI. But NBFCs do not have direct access to these systems. Deposit insurance facility of Deposit Insurance and Credit Guarantee Corporation is not available to depositors of NBFC, unlike in cases of banks. So these are the three key differences where we can identify whether this company is a non-banking financial company or a banking company. What are the requirements for registration with RBI? First question is that whether every NBFC requires to be registered with RBI. Answer is no. But what kind of NBFC can register with RBI? RBI deals with substantial uh, amount of business when it comes to NBFC registration. So a company incorporated under Companies Act and desirous of commencing business of non-banking financial institution as defined under section 45, 1 subclause A of RBI Act 1934 should comply with the following. First of all, it should be a company registered under section 3 of Companies Act 1956. It should have a minimum net own worth of 2 CR, 2 crore, minimum net own fund, that is called NOF, required for specialized NBFCs. That is the minimum requirement if any NBFC is desirous of getting it registered with RBI. There is one kind of NBFC which are called systematically important NBFCs. So, which they are, who they are. So, NBFC whose asset size is of 500 crore or more as per last audited balance sheet are considered as systematically important NBFCs. So, rationale for such classification is that activities of such NBFCs will have a bearing on the financial stability of the overall economy. So they are covered under a special category, which are called systematically important NBFC because of its financial size, that is 500 crore. Does RBI regulate all NBFCs? No. So object is to avoid dual regulation. So these NBFCs have been exempted from requirement of registration under section 45(1)(a) of RBI Act 1934, subject to certain conditions. For example, housing finance companies are regulated by National Housing Bank, NHB, which came into existence in 1985. Merchant banker, venture capital fund, stock exchanges, stock brokers, sub brokers are regulated by Security Exchange Board of India, that is called SEBI. I think everyone has heard about SEBI. Insurance companies are regulated by IRDA, Insurance Regulatory and Development Authority. Chit fund companies are regulated by respective state government. Now coming to what are the different categories of NBFCs registered with RBI. There are three categories of NBFCs which are registered with Reserve Bank of India. In terms of the type of liabilities into deposit and non-deposit accepting NBFCs. Second category is non-deposit taking NBFC by their size into systematically important and other non-deposit holding companies by any kind of activity they conduct. As I told you in earlier slide, housing finance companies, stock companies which are regulated by SEBI, insurance companies which are regulated by IRDA, housing bank, uh, National Housing Bank. There are three different regulators which are not covered here and do not require to be registered with RBI. So these are excluded from the list. Different types of NBFCs which are registered with Reserve Bank of India. Number one, asset finance company. An asset finance company, AFC, is a company which is a financial institution carrying on its principal business, the financing of physical assets, supporting productive economic activity such as automobiles, tractors, lathe machines, generator sets, earth moving and material handling equipments moving on own power, a general purpose industrial machines. Principal business for their purpose is defined as aggregate of financial real physical assets supporting economic activity. Income arising therefrom is not less than 60. That is the prerequisite to form a asset finance company of its total asset and total income respectively. Investment company means any company which is a financial institution carrying on its principal business acquisition of securities. Loan company means a company which is financial institution carrying on its principal business by providing finance, that is lending. Infrastructure finance company is a non-banking finance company which deploys at least 75% of its total asset in infrastructure loans and has minimum owned fund 300 crore, has a minimum credit rating A or equivalent, and CRAR of 15%. Systematically important core investment company is NBFC carrying on business of acquisition of shares, securities, which satisfy the conditions that it holds not less than 90% of its total assets in the form of investment in equity shares, preference shares, debt, or loans in group company size is 100 crore. So these are the different types of NBFCs which are required to be registered with Reserve Bank of India under Section 45(1)(a). And what we need to take as a bullet points to uh, be kept in mind under this topic is that what is NBFC, which has been defined as it does not do certain banking functions like accepting demand deposits, and it cannot issue checks, and its principal business is um, payment settlement is another key difference of banking company and non-banking financial company and non-banking company. So we discussed about three types of companies here, and major focus remained on NBFCs, understanding and its differences and its different regulators. So with this, I would end here. Happy learning. Thank you so much. Have a good day. Take care.